Imagine having a trading assistant so advanced that it's like having ChatGPT, but exclusively tailored to LuxAlgo's premium toolkits. Now picture being able to ask it specific complex questions like I did recently. I asked LuxAlgo's brand new AI backtesting assistant for a strategy with these conditions: over 100 trades, less than 50% drawdown, a win rate above 60%, and a net profit exceeding $8,000. Oh, and I wanted to trade the E-mini S&P 500 futures using the price action concepts indicator. Sounds ambitious, right? Well, the results were beyond what I expected. The backtester delivered a strategy with a net profit of more than $36,000 over 242 trades, a win rate of 62%, and a max drawdown of just 33%. Now that's really impressive. So I opened TradingView and loaded LuxAlgo's backtester for the price action concepts indicator. From there, I adjusted the settings to match the conditions I had asked the AI to optimize. But when I switched back to the AI tool, I realized the profit factor of 1.5 wasn't quite good enough for me. So I went back to the backtester and refined the settings further using Step 1 and Step 2 conditions. After tweaking, I achieved even better results. A net profit of over $40,000, 170 trades executed, a win rate of 60%, a drawdown well below 30%, and a profit factor of nearly 1.9, far exceeding my expectations. But here's the catch. This strategy doesn't use stop losses or specific targets, which can leave profits on the table or expose you to unnecessary risks. That's why it's better to refine this into a manually traded strategy, one where we can control entries and exits for maximum precision and profitability. What we're going to do now is take those conditions and turn them into a practical trading approach, and that's exactly what I've done for you. So let's dive straight into it. To apply the indicators on your chart, log into your TradingView account and open the E-mini S&P 500 futures on a 5 minutes time frame. Open the indicators and first search for LuxAlgo's price action concepts and click to add it to your chart. Alright, let's start by adjusting the settings of our first indicator. First, set both the internal and swing market structure to none. Next, ensure that volumetric order blocks are enabled. Then, in the length setting, increase the look-back period for detecting swing points from 5 to 10. Finally, scroll down to the liquidity concepts section and enable the liquidity grabs option. And now, before we apply the second indicator to our chart, let's first understand the tools we're going to use, starting with volumetric order blocks. These blocks highlight key price areas where informed traders accumulate orders, marking them as potential zones of support or resistance. Bullish order blocks appear near swing lows and act as support, while bearish order blocks appear near swing highs and serve as resistance. They disappear once the price interacts with or mitigates them. Each block shows metrics, like accumulated volume, which helps determine its importance. The higher the volume, the stronger the block. You'll also see green and red bars within the blocks, showing whether buying or selling activity dominates, which helps gauge whether price might respect or break through the block. Now that we understand order blocks, let's move on to another powerful tool in this strategy: liquidity grabs. These highlight areas where significant trading activity occurred in high liquidity zones, often leading to reversals. Bullish liquidity grabs, highlighted in blue, signal potential reversals from demand zones, while bearish liquidity grabs, highlighted in red, indicate reversals from supply zones. Alright, let's add another indicator to our chart. Click on Indicators, search for LuxAlgo signals and overlays, and add it to your chart. Now open the settings and uncheck everything except for reversal zones. Reversal zones are an excellent tool for identifying potential tops and bottoms, making them great for spotting entry and exit points. But for today's strategy, we'll be using them specifically to determine where to set our stop loss. Finally, for the last indicator, click on the Indicators tab once again, search for SMA, and add the smooth moving average to your chart. Next, double-click it to open the settings, then change the length to 200 and set the time frame to 15 minutes. And now let's go over the rules for entering a trade. First, we'll start with the rules for entering and exiting a buy trade. For the first condition, we need to see the price exiting an order block. On the chart, we can spot this order block, and as the price breaks out of it, our first condition is satisfied. Next, we need to wait for a bullish liquidity grab, which is our second entry rule. A few candlesticks later, it appears. Now we check if the candlestick at the time the liquidity grab occurs is located above the SMA line. It is, so all conditions are met, and we can place a buy trade at the close of this candlestick. For the stop loss, we'll use the middle of the green reversal bands as our reference point. To take profit, we'll aim for a 1 to 1.5 risk-reward ratio. Now let me show you another buy trade example. For the first condition, we need to see the price exiting an order block. On the chart, we can spot this order block, and as the price breaks out of it, our first condition is satisfied. Next, we wait for a bullish liquidity grab, which appears a few candlesticks later. At this point, we check if the candlestick where the liquidity grab occurs is positioned above the SMA line. It is, so once again, all conditions are met, and we place a buy trade at the close of this candlestick. For the stop loss, we'll use the middle of the green reversal bands as our guide. For taking profit, we'll aim for the same 1 to 1.5 risk-reward ratio as in the first example. And the exact opposite is true for sell trades. For the first condition, we need to see the price exiting an order block. On the chart, we can see this order block, and as the price moves out of it, the first condition is satisfied. Next, we wait for a bearish liquidity grab, which appears a few candlesticks later. At this point, we check if the candlestick where the liquidity grab occurs is positioned below the SMA line. It is, so all conditions are met, and we place a sell trade at the close of this candlestick. For the stop loss, we'll use the middle of the red reversal bands as our reference point. To take profit, we'll aim for a 1 to 1.5 risk-reward ratio. Now let me show you another sell trade example. For the first condition, we need to see the price exiting an order block. Here we can spot this order block, and as the price breaks out of it, our first condition is met. Next, we wait for a bearish liquidity grab to appear. A few candlesticks later, it does. Now we check if the candlestick at the time of the liquidity grab is below the SMA line. It is, so once again, all conditions are satisfied, and we place a sell trade at the close of this candlestick. For the stop loss, we'll use the middle of the red reversal bands as our guide, and for taking profit, we'll stick to the same 1 to 1.5 risk-reward ratio as in the first example. If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.